I'm going to bring up Mike and Vivian. Come on up, guys.
Mike and Vivian.
You have one more mic?
Yep.
Perfect. Okay.
Hello.
Where's your other half? There you go.
Don't hold them close together.
Thanks, Lee.
All right. No problem.
It's fine.
You got to stand next to her. Stand next to her.
Before I get, can I start?
No, not yet.
Let me get behind you.
Wait.
Okay.
You ready? All right, now you can start.
Okay. Before I start with the IRO stuff,
You have to hold the microphone close.
I want to say that we also used Jennifer McCormick for single family that we had, so it's kind of interesting that that was mentioned multiple times.
Very nice. So you started in single family.
Oddly enough, yes,
Okay. Why is that oddly?
because that was not the intent.
Okay.
But going back, we also used Corbett on some of our houses. And I'm surprised that everybody that was up or is up here has property in Texas City.
There you go. Yeah.
Where's this property at today?
Must be a decent place
Texas
to invest.
City.
Oh my God.
Yeah, so that was
Great.
an interesting thing. I didn't expect that. I don't know if that was scheduled that way.
Oh yeah, we plan all this out. Whatever. Not a chance. All right, go ahead. Tell us a little bit about yourselves.
The little bit that I want to talk about with this slide is the bottom part that talks about the experience. We had experience buying houses. We had experience selling houses. We did not own any rental property. So we had no experience owning a multifamily property before Lifestyles. Next slide. Who's
And
doing
how
this
did you
one?
learn? But
You're doing the slides?
yes, I'm doing the slides. I got to make sure you stay on task.
We do have to get out of here at a certain time.
Yeah.
Okay.
And I know what tends to happen with you, Mike. So it's all right. Good. All right. So no, you mentioned you wouldn't have done this. You had no clue. I don't think you guys understand the amount of education that Lifestyles has to offer. When I first joined Lifestyles, we had to come up here to the class, and there'd be somebody up here talking, and we would kind of learn it like that. The amount of information that's out there on video now, and it's all online, and you can go through master level classes. It's literally like a college education, at least another semester or two, right?
Well, Dell hired a lady that had a doctorate of adult education delivery so he could create a university-level real estate education platform, and she did just that. It is the best in the country. It is.
Really good. It is awesome. So, but just going to the 2-day alone, you will learn, at least I did, the first one I went to, you learn so much just in that, you're ready to go. You can buy a house, I think, right out of your course, can't you?
That's correct.
Okay.
You'll walk out Sunday afternoon knowing how to buy small single family and small multifamily, how to find it, rehab it, operate it. You learn everything. It's soup to nuts.
Did y'all know that?
Yes.
Okay.
Yes.
All right.
Sorry.
So why'd you join Lifestyles?
We knew that we needed a little more help with retirement. We weren't sure how we were going to do that. We didn't really get involved in forcibly looking for what the new thing would be for retirement. It just happened as a happenstance. One of the houses that we had owned before, like I had mentioned, we were rehabbing that to sell. And we had a thought at that time, should we sell it or rent it? And there was a neighbor that came by and started talking to us. Well, actually talking to me. She was using a chop saw in the garage. And he started talking to me. I started asking questions. I had never seen this guy before. He told me he came from across the street. I have never seen him after that. It was just like a weird kind of deal where he mentioned Lifestyles, and that's the very first time we've heard anything about Lifestyles.
All right.
Is that like a aberration thing? Just like
It was an angel.
an angel?
Angel of lifestyles present.
I didn't know we had those, but okay, cool. All right, so what are we talking about today?
So we're talking about a small IRO property in Texas City, and when I was talking to Lee before this, he said, you need to make sure you tell him where Texas City is. Well, everybody's told you
It's an
guys.
hour south of Houston.
I also want to add that it's 15 miles north of Galveston.
Okay, good point, good point.
Okay. So this is a value add property. Sometimes you don't hear that often as it used to be some years ago. $40 a door. I say $40,000 a door. Back then, that was a lot of money to have to pay for a property.
Dude, I'm telling Stella, you're going to go through this, how much you paid. It's still a lot of money to a lot of people. I'm not going to lie. Not gonna lie. And you mentioned value play. We have things what we call value plays, and we have yield plays. It's a type of investment that we typically do in multifamily. But again, Brian's gonna go over that this weekend on the differential parts of those.
And we have people who buy these properties as independent rental owners. And then we also have people who buy these properties as lead investors, and they take partners. So one person doesn't bring $500,000. They may have 10 people that bring $50,000. Copy? We do it both ways. So, excellent.
One thing I wanted to add is for the new people in the crowd, people always ask, well, how did you know how to get this property? Well, it goes all the way back to when you decide that you want to buy a property, and you have to make sure that you go to all the events, as many as you can. You make sure you listen to people talk, because when people talk, you can understand, I want to do what they want to do, not so much what they want to do. And then you'll see people over and over and over again, and you'll start asking questions. And that's how we got into this. I treated this as a job. I asked a lot of people about if they knew anything about multifamily assets being sold. I talked to people down the street because there was an open house. There was a realtor. I talked to her. She looked at me funny, and then she goes, well, I know a guy. And I thought, see, yeah, that's pretty cool.
I thought you were gonna tell me you had another angel coming, but anyway.
Well, actually, this particular property, that house that we were rehabbing and the neighbor that came over, the person that bought that house, their mother was the realtor. That lady was the one that brought us this property.
Really?
Okay. Nice.
She represented the seller,
Okay.
Diana.
Still nice. Very sweet. Okay, so you purchased it back in 2018, and you paid $40,000. It's still like $1.7, $1.8 million. That's, to me, that's a lot. Is that?
It's a lot.
Okay. And you basically had to put down $460,000 to buy this, right?
Yes.
And not everybody again here has $460,000 to put down on their first property. This was your first multifamily, right?
Yes.
First multifamily, but again, what he was saying earlier, if you don't have that much, you can always say, well, I found the deal. I'm going to syndicate this deal. I'm going to bring in a bunch of partners, what we call passives here. That's called syndicating a deal. Again, he's going to go over that this weekend, and he'll show you exactly what that means and what rules that we have in place at Lifestyles to protect both the lead and the passives that invest their money with him. Because even if I'm investing, I don't know, $100,000, $10,000 with you, that's a lot of money for a lot of people. So they're going to make sure, you got to make sure they're going to take care of it for you, right? But let's see what happened to your $460,000, right? Oh, one thing I did want to mention, this was owner financed, okay? This is a little different than most deals. Typically, you'll go out and find a deal, and you'll go out to the bank and say, I want to borrow X amount, and they'll evaluate the deal, okay? And when they evaluate the deal, they're going through and they're underwriting it as well as the mentor will help that person underwrite it as well. In this particular case, they owner financed. And why'd y'all do that?
Well, we had to do that because the property was in very poor condition. It was about 50% occupied, and we would not be able to get a regular loan.
Okay.
So it didn't qualify for typical bank financing or even agency financing. And I'm going to discuss this in detail this weekend, the different types of financing we do for single family and the different types of financing we do for multifamily. So great point.
Okay.
Not only was it 50%, but when we started rehab, it went down to 30-something%.
Sure. I'll teach you about
lot of
that this
people
weekend
left.
also.
That just raises my anxiety a little bit here. All right, so also on this property, you spent another $500,000 to rehab it because it was such disarray, right?
Correct.
Very good. So again, if you're new, again, he's going to go over that this weekend, but we don't buy properties to run them into the ground. This one's already been run into the ground. We buy properties, fix them up to move better people in. What do those people do when they come in? They pay you rent. It's kind of cool how that works, actually.
And as you've seen from the pictures in the single family, and I'm sure we're going to see on the multifamily, at Lifestyles, we teach best product at the best price, right? And I'll go over that in detail this weekend, but you've seen it in the picture examples this evening, have you not? Excellent.
Let's look.
Oh, yeah.
Okay, so this is the former laundry room. Apparently, there had been a fire before we bought it, and this is what the laundry room looks like now.
The fire, from what we heard, was from somebody that lived on the property that was a little unhappy.
And it was completely
What, that
destroyed.
it took his quarter? All right, so you guys are probably looking at this going, oh my God, why would you buy that? Well, we knew about this before, when they got under contract, before they even purchased it, we knew about this, right?
Yes.
Because the mentors will actually come out with a team of other lifestyle members, if you ask, and we'll actually walk every single unit with you, and we'll walk the laundry rooms, we'll help you with all through that entire process. So what you're seeing here, the before and after, they knew going in what this was. So again, they spent money on this. This is where that $500,000 kind of went into.
Just in the laundry room.
Just in the laundry room. Very good.
We also noticed, as you can see on the one picture, a hole in the ceiling. That hole went all the way up to the bathroom above.
Awesome.
We had several of those throughout the property.
Nice.
I mean, it's a big hole.
So
That little drywall hole is smaller than the actual hole
You
that's
could
in the
lose a
floor
kid there.
upstairs.
as Lee was saying, before they had this property in contract, they were able to do their inspections, and I'll talk to you about that this weekend, just similar to exactly what the single family did, what Richard did. He got in contract, he has the option for the inspections. It works a little different in multifamily, but you'll have your period where you do your inspections. You'll understand the cost of the repairs before you move forward with the deal, right?
Correct.
Or maybe
Yeah.
you had a,
Well, we had a ballpark figure.
sure,
Yeah.
excellent.
And then we had, this is actually good compared to what we started with. That people would just dump trash, dump old furniture, mattresses.
She's talking people. She's not talking about the people that live there.
Well, it could have been.
She's talking about anybody that drove by that had something in their pickup truck.
Gotcha.
And so it took a while to get that cleaned up. And now, on the after picture, you can see we had an egg hunt for the kids at Easter, and people were putting wreaths on their door for Christmas, and they're
They care about their community now?
yeah.
Awesome.
But where were the people that were using the furniture on the side? What happened to them?
We
I'm just
got
kidding, don't
rid
answer
of them.
Actually, we had that.
Okay, let's get into the details here.
All right, let's get into numbers. So where are we
Okay.
at right now on this property?
On this property, these numbers come from the last 12 months. I ran them from July of '22 to June of '23. And that's our gross income, our expenses. Now, our expenses are a little higher than 50%, mainly because of taxes and insurance costs.
You've gone back and run that, so.
Increases.
Right.
And I'll teach you about the costs of operating multifamily properties this weekend also. Yep.
So you're continuing. So think about, okay, so again, he's going to go over that this weekend. How we value properties on the multifamily is very different than how we value properties on the single family. We have this thing called NOI, which is net operating income, which you will learn this weekend if you don't already know. And net operating income, the higher that is, we divide it by what we call a cap rate, which is interest rate, cap rate. You divide it by that, and that gives you the value of that multifamily unit. So what happens if the NOI goes up? What do you think is going to happen to the property? The value goes up. What do you think is going to happen when the NOI goes down? Goes down. Value goes down. Very good. So they were basically able to create $200,000 worth of NOI. What do you start with, your NOI? I think that's on the next slide, isn't it?
I think
We'll
it's
get
on
to
the
that.
next slide. I
Yeah.
think it was like 4,000.
We're going to get that. So basically right now, after they pay their note, they're generating about $4,500 a month in cash flow, which right now that equates to about 11, 12% return cash on cash, okay? Everybody get that? All right, but here's the issue. Go ahead.
No,
But here's the problem, okay? That cash flow they call cash on flash, that was on that initial $400,000 that they put out of pocket at closing. What the current valuation on this property is $3.65 million. What did you buy it at? I forgot that number.
go back a little.
1.76.
1.76, okay? So, and that was 5 years ago?
Yes.
Yeah, get that up there. 5 years ago, 1.7. Now, 3.6. Oh, but wait, there's a cash distribution. What happened there?
We refinanced in 2020.
You refinanced. You basically paid that seller's note off who was carrying you, right?
Correct.
Yes.
And they basically refinanced, and you pulled out
About 650,000.
$650,000. Then there's been another $100,000 worth of cash flow along the years. So,
so
is that good?
in a few years, 5, 6 years, how long you own the property?
5 years.
5, since 2018. You put $450,000 in the deal. In 5 years, you've pulled out $750,000.
No. They actually pulled it out in year 3.
Oh, I'm sorry.
Yeah. Oh, is it year
In
two?
year 3, you pulled out,
It's
sorry.
in 3.
Oh, it's in three, yeah.
In
Year
year
three.
3, they did a cash out refi for $650. But the $750 number is the $100,000 in cash flow you've been getting over a few years.
Yes.
So over the past 5 years, they've made $750,000 on an investment of $460. That's 160% capital gain. You understand that? Or 106% return on actual return on the deal.
Right.
Realized, not just unrealized, because that'll come when they sell. They've actually made 160%.
Yeah, they
Copy?
pretty much got all their money back out of the property. So when you're now looking at that quote-unquote cash-on-cash return off your initial investment, what happened, that initial investment, they've already been paid back for. So any cash flow that comes off the cash flow now, what's the return on that? It's infinite. God, you guys are. Exactly. All right, so let's walk me through this NOI and how much you've been making over the years. What's been happening here? So in year one, I asked what the NOI was. What happened then?
Well, we didn't have any income.
That was takeover.
Well, we had income because there were people there. Not everybody there paid, but we had people there. But because of the rehab, there was a lot
So
of
you see the significant increase in NOI. The first year was takeover, kicking out the bad residents. I'm going to take you through a scenario like this weekend in the 2-day, how we clean these properties up and significantly increase the NOI, as they have done with a real-world example here.
Yep, exactly. So you'll see years 2, 3, 4, 5, they're generating about 50,000, 55,000 plus a year in cash flow. And again, keep in mind, they own this 100%, okay? 100%. All the cash that comes in, whatever they want to take out, they're taking out, right? Whatever they want to refinance, they get to refinance. But the real value of this is this next slide. Remember when we talked about the value of NOI? Right? That's how we value the multifamily. What happens when that income goes up over the years? What happens to the value of the property? It goes up. So in year one, they purchased it for like 1.76 million, right?
Correct.
So also, please, don't be afraid of these acronyms, NOI,
Oh, sorry.
net operating income, all that. I'm going to teach you this weekend exactly how to evaluate single-family and multifamily property. And you're going to leave the 2-day with an understanding of all these numbers. So if this is going over your head now, I want you to take away, they made a crap load of money. Come to the 2-day and I'll teach you how they did it. Sorry.
I'm going to tell you how they did it before you leave the stage, actually. Okay, so again, in year one, they purchased it for 1.76 million. Now they got closing costs and all this other stuff in there, so it's actually they paid a little bit more. But in year 5, right now, on current what it's worth, is $3.65 million. I want you to take that and divide it by 44 real quick. Does that mean units? Okay,
44 or 44?
44.
44.
3, 6, 0, 0, 0.
Like those zeros.
Yeah.
Too many zeros. 3, 6. 3, 6.
Come on, help me out.
Got it? 3.6 million. Okay.
Divided by 44.
44
44 units.
units. Oh, okay.
What is that?
81 a door.
So that's
82 a door.
About $82,000 a door is what they're saying a projected worth. I'm going to tell you, I know the Texas City market, and I know there's stuff selling for that right now more than $82,000. So I actually think that 3.6 is probably undervalued by $300,000-400,000 maybe. So I'm thinking that they've actually captured another $2 million and it's currently sitting in the property right now, that if you were to sell it today and paid off the existing debt, they would just give you
Okay.
more than a crap load of money.
And that's the thing. At Lifestyles, we underwrite our deals. We analyze them conservatively, right? And they work out much better in the end. We do that.
Very good. So if you still got $2 million in the deal, you've already taken out $750, you initially invested $450. Wow, is that good?
That's great.
Now here's what people are going to ask you at Lifestyles. Why didn't you syndicate this deal? Why didn't you bring in partners to participate in this?
Interesting question. In the beginning, we wanted to make sure that we could handle our own money. So
Very good.
Makes sense.
And that is a valid point. I will tell you that's exactly the first thing I did as well, is you're kind of scared. Again, you still have the mentoring, you still have people helping you, but it's getting over that scaredness. The people behind you and the people that have done this for you make that a little bit easier, but once you get over that and you start getting further, but I'm like, screw them, that's all your money.
A quick poll of the room, okay? Who has $500,000 and you want to go make 116% on your money? Raise your hand. Okay. Who has $50,000 and would like to be in a deal like this? Make 116% on your money. There you go. That's the difference between partnering, yes.
And still be, yeah, again,
And
right,
still be in the deal.
They're still in the deal. They haven't gone. All right.
Correct.
So give me a couple things. We talked about increasing the value of your net operating income. There's ways of doing that. And again, Brian's going to go over a number of ways doing that this weekend, but give us a couple points what y'all did. How'd y'all get there?
Well, first of all, once we rehabbed the units, we were able to get people in, so we increased occupancy, and that gave us a lot more people paying rent, so
Yes.
that was good. Then once we had them in, we increased rent. We have started charging pet rent, so now we're
course.
getting that on.
Pet rent's phenomenal.
Well-
Actually, Franco said it earlier, right?
AKA Marco.
Yeah, okay, Marco.
We didn't charge it at the beginning because we were trying to get people in. But
You know
now-
people pay more for their pets than they pay for their kids, right? You gotta charge that stuff. You gotta charge that stuff.
And we also worked to reduce some utility costs. We put in low-flow toilets, LED lighting. We put in all new HVAC units.
You improve the property.
Absolutely.
Awesome.
Very good. Awesome. So what do y'all do next? You're sitting on a gold mine, and what do you
You
do
got
next?
$2 million in unrealized capital gains, right?
Well, we still have that loan that it had a 54321
Okay.
step down. So in a couple of years, we'll either refinance or sell. We're looking to purchase another property right now
Excellent.
Very good. As an IRO or as a lead?
as an IRO.
As an IRO.
All
See?
right. Hey,
I'm going to tell you that if you can go IRO, it's the best route because it's you get all this, you get to make the decisions, whether you roll it forward, whether you keep the asset, how much money or how much you take out of the asset, how much you can put in. You don't answer to any, well, I mean, you answer to each, you answer to her. Yeah.
Yes, I do.
Yeah. Mike answers there.
No.
And then that's the only one. It's a great deal. If you can start off small and just start going up, that is definitely that is one of the paths that we have to wealth. It's a great place. All right. Very good. So let's give us your quote, dude. Give us your quote. Kill it.
I'm not going to read that, but I wanted to take the time to say we wanted to thank our lifestyle friends for their kindness and support. You don't understand how much you need them when you start. When I was working, I had to talk to a lot of different people from a lot of different departments to get things done, and I thought, I'm not doing that again. And I ended up doing that again.
excellent. What about the team? Yep. There we go. Mentors.
Who's on your team?
Things changed a little bit. We had Randa up there as well.
Yeah, she's definitely part of your team.
Lee and Curtis. Lee walked the property with us and has answered a ton of questions that we've had.
Go Lee.
And Randa was invaluable. So, and then we used Lumen and Liberty.
Liberty Builders. Okay. Very good. All right. Any questions that we
Yeah.
have? For
Real
round of
quick
applause
round of
first.
applause. Why not? Get started. And Dave, you got some for us?
Yeah, I got two questions.
I'll
First
give
of
you
all-
one, then we'll take one from the room, then we'll come back to you.
All right. Did y'all self-manage the property or hire a management company?
Great question. So,
Good question.
yeah.
We tried to hire managers, and didn't work out.
I'll teach you in the 2-day also, some lifestyle members self-manage the property, right? They went out and hired a manager and a maintenance man. They kind of run the HR procedures for them, or you got a mayor on site who does most of your stuff, right?
Actually, we don't. We self-manage.
Okay.
We
They do
tried
it.
to hire somebody.
So you are the
They
manager.
are the managers, yes.
Dell has a great saying, if you don't have a manager, you is the manager, right? And also, there are other members at Lifestyles who hire a professional third-party company to do those services, but Maybe because of the property condition, y'all ran into some issues or something and chose to self-manage it?
Well, the first manager, one of the tenants, one of the residents, called the police on her, so that didn't work out
There
too
you go.
well. The second manager,
Didn't
she
do a
would
job.
be there until we left the property. We'd come in the morning, we'd talk to her, we'd talk about things that need to be done, talk to the maintenance person, and as soon as we would leave and we were off property, she would leave.
Awesome.
Okay.
And I got a telephone call. Somebody wanted to look at an apartment, and I'm thinking, what happened to the manager? That's how we found out that she was leaving.
So I will tell you that they want to be managing their property themselves. They could definitely find a qualified manager, but they enjoy what they're doing. They gripe about it every once in a while, but they like what they're doing. They call up operational consultants, other people, and myself. They're asking questions. We answer their questions. So they're basically doing what they want to. They could definitely hire a third party if they wanted to. That definitely takes some money out of their pocket. Just understand that. And they could definitely not be the actual manager on-site management team. But when you first got there, kudos, because basically they dug into this asset and they did what needed to be done to get it done, to make it to this level. And you will find a lot of lifestyle people, that is exactly what the leads and the IROs do. Once we purchase the property, you're gonna figure it out. You've got plenty of help behind you. You've got mentors, you've got ops consultants, you've got a slew of other people in the room that you've talked to and made friends with that are all just gonna come out there and help you. I mean, we've been to your property numerous occasions, right? I mean, whenever they call,
Thousands of
even when they don't call, we're probably showing up half the time because we know Texas City and we just go down there. So understand that there's different ways of doing things. As IROs, when you own your own property, you can do whatever you want to. It's your property.
No
right?
partners.
No partners. Very good.
you
Yes.
got?
Considering, is this you guys' only property right now? Or you have other?
That's another good question, because I was going to
Yes, it
start
is.
the pitch by saying this is our first IRO deal,
Okay, gotcha.
which is really our only IRO deal. But
So
yeah,
my main question is, with, I guess you guys having the 5, 4, 3, 2, 1, I don't know what that is.
You'll learn
but
next weekend.
Yeah.
with you guys pulling out your money, 160% of it, and kind of being in a position where none of your money is tied in the deal and having, I guess, roughly around $2 million, what Lee is saying, based on the evaluation that's hidden now, what would you typically do in this circumstance? Would you
So-
wait into that?
Is your question, you pulled out 650 grand. It cost you 450 to buy it. What'd you do with that money? Is that your question?
Well, my question is,
Did
what do
they
you do
buy
now?
another
I mean,
property? Are they looking
you
to
got all
buy
that
another
money
property?
back?
Yeah, but
Yeah,
before,
what's your plan with this property?
okay, hold that. But did we also mention that 650 was tax-free? That was
Yes.
not a taxable
Tax
event.
deferred.
Tax deferred. It was not
It's
a taxable event.
Tax-free when done correctly by 1031 and when you sell the property at the end,
Okay.
right? But are y'all looking for another one, or?
We are.
well, the
We're looking.
refi money that we got out was not as much as I had anticipated.
Okay.
It happened to be during COVID.
Ah.
Just before COVID, we were going through the lenders, and they said they were to give us 80% loan to value with a sub 4 interest rate. And we were all,
They got
And he believed them. Yeah,
yeah.
exactly. Yeah.
And then sometime later, they go, well, everybody and their brother wants money, so we're going to have to squeeze. And we're like, ah.
So they changed lending terms and you only made $650,000 on a refi?
Yes.
You're complaining?
Well, they went from 80% to 75 because of COVID, and then they went from 75 to 70 because we live in the Houston area, and they said oil was an issue. And I'm thinking, oil's not an issue. So
You
we were going to
expecting
use
double percent return? Is that what
we were
you
going to use that money to buy another property.
Oh, okay.
Was there a second part of your question?
My main thing is, what would you do with this property, considering, you got the money back? I know you were expecting to have, I'm assuming, like somewhere around double what you initially put in?
What are you doing forward with this
what are you
property?
doing
What's your
with this
plans going
property
forward on
moving
this
forward?
property?
On this property, probably hold it.
They like holding it.
Until just whenever you feel like
There-
selling it, or?
Till whenever.
Yeah.
Until we don't want it anymore.
Hey, there you go, get it out, huh?
Here's the thing. They're generating 55 plus grand a year, which is nice. They're doing what they love, right? They are actively looking for other.
They've gotten all
got-
of their money out of the deal.
They don't. I don't care what they
Tax-free.
say. They love it. Otherwise, they wouldn't be doing it, right? That's what I'm saying. I get their calls. I'm telling you, they like what they're doing. All right?
Excellent.
So, but what you're saying is it's their decision, right? If they want to refinance, you probably refinance again another couple years, right? Depending on the prepayment, they can refinance, pull some money out again, reinvest the money, it's all their decision, and that's the normal process of buying and selling property.
You gotta be many options.
David,
Exactly. Okay. Any
you.
question?
Thank you for the question.
online?
we have one more.
No? All right,
Okay.
good.
Quick
In the room.
question. Are you in any passive deals?
Another good question. I won't get into the long story about how long it took us to find this property, but during that time, we're like, we got to do something. Actually, she said that. And she goes, we need to get into single family. Well,
Yes
before
or no question?
it needed a background story.
No, it doesn't.
So we got into passive deals, the first thing.
So
And we got into single family.
the question was, do they also invest with other multifamily operators who are leads on deals? And the answer is yes. And then they also bought some single-family deals, right?
The answer is yes. We were in 2 passive deals, which have since sold. We are no longer in any passive deals at the moment.
Excellent. Man, great answer. Good answer to that question.
There are no yes, no questions with Mike at all. All right, very good. Any other questions? All right, can I have a big hand of applause? That's
Thank you
amazing
very
what they
much.
did.
Phenomenal.